second reading debate on the Inland Revenue Amendment tax deductions for leased premises, reinstatement, and allowances for buildings and structure, Bill 2024. Mr. Holden Chow, Chairman of the Bills Committee on the bill, will first address the Council on the committee's report. Mr. Holden Chow. President. As Chairman of the Bills Committee on Inland Revenue Amendment tax deductions for leased premises, reinstatement, and allowances for buildings and structure, Bill 2024. I would like to report on the salient points of the deliberations of the Bills Committee. Members sought clarification from the administration on whether the tax deduction for reinstatement costs for premises under a lease would apply to land or buildings and structures thereon under a lease, as well as premises under leasing arrangements such as government land licenses and license agreements. The administration advised that there were no definitions of lease and premises in the IRO Inland Revenue Ordinance. Insofar as the application of the bill is concerned, premises would generally refer to a place for carrying out a business and may include land and buildings. The administration also advised that as the objective of the bill was to help business operators reduce their tax expenditure as lessees, the administration would adopt a lenient approach in determining whether the reinstatement costs were deductible and would not insist on having a physical tenancy agreement as the basis of granting the tax deduction. Even if a claimant is claiming tax deduction on reinstatement costs of premises under license agreements or other forms of leasing agreements such as verbal agreement, the IRD Inland Revenue Department will consider whether the relevant leasing arrangement of the premises operates in the same way as a lease, either in substance or in effect. For example, whether the claimant has been granted exclusive right of use of the premises and whether the claim meets the conditions for tax deduction as prescribed in the ordinance. Members inquired how the administration would assess the reasonableness of the amount of the reinstatement costs and whether the administration would consider specifying explicitly in the proposed new Section 16(2)(k)(d) who would be responsible for determining the reasonableness of the amount of the reinstatement costs. According to the administration, in determining whether the amount of the reinstatement costs is reasonable, one of the key references is whether the amount claimed deviates significantly from the costs of reinstating premises of a similar nature and size to their original condition in the market. For profits tax cases in general, the IRD will adopt an approach of making tax assessment first before random checking. In conducting random checks, the burden of proof is on the claimants, and the IRD has the right to request claimants to furnish information on the reinstatement costs, such as a breakdown of the costs claimed and corresponding supporting documents and independent valuations of the reinstatement works. On whether it was necessary to specify in the proposed new Section 16(2)(k)(d) who would determine the reasonableness of the amount of the reinstatement costs. The administration advised that the existing Section 16(1) of the IRO provided for a list of outgoings and expenses that should be deducted in ascertaining profits in the calculation of profits tax. To the extent to which they were incurred in the production of the profits, such outgoings and expenses will be assessed by the assessors of the IRD on the premise of reasonableness, as reinstatement costs would be added to the list and form part of Section 16(1), and assessors would be responsible for assessing the reasonableness of the amount of the reinstatement costs. It was not considered necessary to expressly provide in the proposed new Section 16(2)(k)(d) who was to determine whether an amount of reinstatement costs was reasonable. President, the following are my personal views on the bill. Deputy President, let me say this. The first part of the bill is about introducing a tax deduction for reinstatement costs for SMEs if they have to rent a new commercial premises. If they are to reinstate their original premises to the original condition, there will be costs and there will be a tax deduction with this bill. I hope that with the introduction of tax deductions on this, it will help facilitate business activities and help SMEs. During the deliberations of the Bills Committee, members express concerns on the definition of premises and whether toilets of commercial facilities would be included, whether outdoor space would be included, and various leasing arrangements, whether they are covered. In the deliberations of the Bills Committee, the administration has made clear various points. As for the determination of reasonableness, whether assessors are the ones who are to determine the reasonableness. In fact, with reinstatement costs, it is often the case that we should refer to what is in the market to reinstate the conditions to in a similar nature or size, whether there are extra works that are done. These were all covered in the deliberations of the Bills Committee. And in the second part of the bill, it is about removing the time limit for claiming annual allowances for commercial and industrial buildings and structures past 25 years. And for these buildings and structures, due to previous tax treatment, it is often the case that there is a time limit and there is disparity in tax treatment. And I thank members for their participation, even though they may not have the expertise in the area. With in-depth discussions for members without the professional background, they also have better understanding of the provisions. But members basically have called for simpler drafting so as to aid the public's understanding of the provisions. But I do understand that accounting principles are involved. It may not be the case that we can have amendments in this area, but these are views expressed by members. Also, members have called for tax incentives to be provided to SMEs in order to facilitate economic activities. Deputy President, I so submit.
Mr. Chankin Paul, I speak in support of the Inland Revenue Amendment Tax Deductions for Leased Premises Reinstatement and Allowances for Buildings and Structures Bill 2024. The bill seeks to amend the Inland Revenue Ordinance so for where the conditions are met, the cost of reinstating the condition of the premises will be tax deductible. This is to lessen the tax burden on businesses. Currently, businesses are not able to enjoy tax deduction for reinstatement costs. It adds to the burden of their operation. That's why I believe this proposal is appropriate and reasonable. It is not easy to run a business in Hong Kong, and there is lack of confidence in the political and economic prospects of Hong Kong. So also there's change of spending patterns with local residents as well as visitors. So businesses face increasing challenges. Now, there's a report that on the review of the 2024 property market and a projection for the 2025 market. We see that in the retail property market, there's now a lower vacancy rate, and Causeway Bay, the vacancy rate improved after the third quarter. This means that businesses are regaining confidence. And also, Shenzhen has recently granted again a multiple visits arrangement for Shenzhen residents to visit Hong Kong, and that will help our economy. Now, businesses have to face various burdens and challenges. Everything costs money, and the reinstatement cost could be a few $100,000 or even a few $1 million is a heavy burden. So I'm glad to see that the Inland Revenue is being very considerate in coming up with this tax deduction proposal. It will lessen the burden of businesses, and we should support it. Now, maybe this deduction, this deduction is actually important for businesses because every cent counts. It will make it easier for businesses to operate their business. And I ask the government to keep giving more support to businesses. We need to improve the business environment, and then more companies will be confident in remaining in Hong Kong for development, and then we can also bring more new business to Hong Kong. Thank you. Ms. Carmen Ken. Thank you, Deputy President. I'm a member of the Bills Committee. I speak in support of the passage of the Inland Revenue Amendment Tax Deductions for Leased Premises, Reinstatement and Allowances for Buildings and Structures Bill 2024. The bill. In the 2024-25 budget, the Financial Secretary proposed to offer tax deduction for reinstatement costs of leased premises to the original condition. And also, the Financial Secretary proposed to remove the time limit for claiming annual allowances for commercial and industrial buildings and structures. Now, when we look at local GDP growth in the third quarter is 1.3% year on year. And then the central authorities have launched various measures to for Hong Kong, and we see that market sentiments have improved. And government statistics show that as at the end of October 2024, in the 3 months compared to the previous 3 months, the retail sales volume went up by 0.7%. And then from the goods value for the same period also went up compared to the same period last year. We can see that there are changes in our economic condition. With the support of the central authorities, I hope the SL government will continue to launch measures that will stabilize the economy and help businesses. Now, these two tax proposals are exactly to lessen the tax burden on businesses. It will also improve the business environment. Now, in the deliberations of the Bills Committee, we believe that there will be foregone revenue on the part of government with these two tax proposals. Now, for the tax revenue may be reduced by about $164 million for commercial and industrial buildings, but I still support the proposal because it will help businesses. Now, on the tax deduction for reinstatement costs of premises to the original condition. Now, we can in some cases, lessees may not need to reinstate the premises. Maybe at the end of the tenancy, the lessee could enter negotiations with owners, and they just need to pay a certain payment regarded as a restatement cost, and that will still be tax deductible. And then if the new lessee pays sum to the original lessee for retaining the renovation, then there is no tax deduction for restatement costs on the part of the original lessee. So these are the various scenarios we considered. And then the second proposal is to remove the time limit for claiming annual allowances for commercial and industrial buildings and industries and structures, and I support that proposal as well. And so there are the basis period for the year of assessment, and then we consider the sale of the commercial buildings or structures, and whether or not the usage period is expired, there could be a tax deduction of 4% of the residue of the expenditure until the value is expired, has been exhausted. Now, if say the original owners have already used up the tax deduction for old buildings, then there will be incentive now with this new proposal for owners to buy these properties. And the administration explained that the reference tax deduction will apply to those cases where properties are used for the business's own purposes. So that means it doesn't apply to the cases of buying properties for investment. And I thank the administration for the detailed explanation. I speak in support of the passage of the bill.
Dr. So Chang-Ling, Deputy President. I speak in support of the Inland Revenue Amendment tax deductions for leased premises reinstatement and allowances for buildings and structures Bill 2024. The bill seeks to give effect to certain proposals in the budget, specifically the two profits tax related measures. It would include introducing a tax deduction for reinstatement costs for premises under a lease and removing the time limit for claiming annual allowances for commercial and industrial buildings and structures. The proposed measures may not be significant adjustments in tax policy, but this is still appreciated because it is enhancing the tax system. It will create a better business environment, creating impetus for growth of the economy. In recent years, the government has been continuously enhancing the profits tax system, including introducing a two-tier system and for specific industries such as insurance, maritime, as well as aircraft leasing, family office, and asset and wealth management centers, industries, providing tax concessions. It has injected impetus into the economy. For example, for tax concessions for financial center related industries have created an impetus for growth in the financial service industry. Recently, there is a world index that says Hong Kong is not only in the top 10 performing tax systems, it is also ranked top 3 in the living environment. It shows that Hong Kong is recognized in this area. Similarly, we have a simple and low tax regime, and we have enhancements in the business environment. Together, they have provided a good environment for more family office business. It really helps us polish our brand. And in the Free Economy Index, we are the freest economy. It demonstrates the government's efforts so far. Even faced with a tight fiscal condition, the government has been continuously enhancing the business environment for the long-term benefit of Hong Kong. Deputy President, the first part of the bill is about introducing a tax deduction for reinstatement costs for premises under a lease. This is a new measure for SMEs or larger enterprises. This should be of help. We have some large retailers who may rent spaces in shopping malls. If they are to move out, the reinstatement costs can get quite high. Now they can get a tax deduction. In this counter-cyclical time, it will be beneficial to them. We also have sluggish growth in the F&B industry. With these tax concessions, it can alleviate their tax burden. This is a new measure. So with the implementation details and approval conditions, there may be disputes. I'm very glad to hear that the government will adopt a flexible approach to actually realize the benefits brought about by these tax measures to businesses. I hope the government can strike a balance and enhance the tax system continuously so as to enhance competitiveness of the Hong Kong economy. Thank you. Mr. Benson, look. Thank you, Deputy President. I speak in support of the Inland Revenue Amendment Tax Deductions for Leased Premises Reinstatement and Allowances for Buildings and Structures Bill 2024. I was a member of the Bills Committee. I also participated in the scrutiny of the bill. The bill seeks to introduce a tax deduction for reinstatement costs for premises under a lease and removing the time limit for claiming annual allowances for commercial and industrial buildings and structures. I express concerns about reinstatement costs, the tax deduction of such. So these can be used in tax deductions, and there is a large range for these costs. In the difficult times, we really need the government to introduce tax concessions for the SMEs in order to make the business environment more favorable for them. The provisions of the bill would allow for the capital expenditure of reinstatement costs to be entitled for tax concessions. This should alleviate the burden on SMEs. We are faced with many challenges. We do hear many small businesses closing, but we shouldn't just leave it be. We need to understand that even with them closing down their businesses, it would also be a significant cost. They have to dismiss their staff. They would also have to reinstate the equipment to their original condition before they return these equipment for hire. So these measures would provide a breathing space for businesses so that they can still sustain their business or at least use it to dismiss their staff members. We have also talked about what is considered reasonable for reinstatement costs. Different premises have different sizes, and the works may be different. For restaurants, they may have a larger space for the kitchen, or they may have a more complex design. The administration said they would have reference to existing tax principles to determine the reasonableness. If it significantly deviates from the market standard, the IRD will ask applicants to furnish information such as the relevant receipts for the works. We will refer to the approach of salaries tax to ask the applicant to provide proof only when the IRD decides to investigate the relevant case. I believe that would maintain the simple and low tax regime of Hong Kong. I believe the bill will promote business activities. I also hope the government will have more measures to facilitate the businesses, especially the SMEs, so that they will have more breathing space. I so submit speaking in support of the bill.
Does any other member wish to speak? If not, I now call upon the Secretary for Financial Services and the Treasury to reply. Then the debate will come to a close. Secretary. Deputy President, I'm grateful to Mr. Holden Chow, Chairman, and the other 10 members of the Bills Committee for scrutinizing the bill, and 4 members just now spoke, and they explained the content of the bill and the different scenarios to the public in a precise manner. The Inland Revenue Amendment Tax Deductions for Leased Premises Reinstatement and Allowances for Buildings and Structure Bill 2024 is now resuming second reading debate. I thank the Bills Committee for their valuable views and for supporting the resumption of the second reading. The bill seeks to implement 2 proposals in the 2024-25 budget to lessen the tax burden on businesses. One proposal is to provide tax deduction for reinstatement costs for leased premises starting from the year of assessment 2024-25. The other proposal is to remove the time limit for claiming annual allowances for commercial and industrial buildings and structures. Under the first measure, if a business is a lessee with an obligation to reinstate the leased premises to their original condition at the end of the term and or on an early termination of the lease, incurs reinstatement costs that are reasonable, a claim may be made for tax deduction on the reinstatement costs. The second measure benefits businesses that purchase second-hand commercial industrial buildings. At present, taxpayers may claim annual allowance for industrial or commercial buildings owned by them for a period of 25 or 50 years from the first use of the building, that is the usage period. A taxpayer who purchases a second-hand commercial industrial building may claim annual allowances in the remaining years of the usage period if the usage period of the building has not expired. If the usage period of the building has already expired, the buyer may not claim the annual allowances. This disparity in tax treatment may discourage buyers from buying old buildings. The bill therefore proposes to remove the time limit relating to the usage period. Starting from the year of assessment 2024 to 25, a taxpayer who purchases an industrial or commercial building may claim an annual allowance equivalent to 4% of the adjusted residue of expenditure even if the usage period has expired. We have provided many examples at the meetings of the Bills Committee to illustrate to members of the Bills Committee the annual allowances that taxpayers may claim under different scenarios before and after the passage of the bill. Some members raised queries on certain wordings used in the bill, and we've provided supplementary information after the meeting to clarify the policy intent. Deputy President, I urge members to support the passage of the bill so that we can implement the two proposals in time in the year of assessment 2024-25. We believe the measures will improve the business environment and lessen the tax burden on taxpayers. I so submit. Thank you. I now put the question to you that the Inland Revenue Amendment tax deductions for leased premises, reinstatement and allowances for buildings and structure, Bill 2024, be read the second time. Will those in favour please raise their hands? Those against, please raise their hands. I think the question is agreed by a majority of the members present. I declare the motion passed. Inland Revenue Amendment tax deductions for leased premises, reinstatement and allowances for buildings and structure, Bill 2024. This council now becomes Committee of the Whole Council to consider